call the December 20th Police Pension and Relief Fund Board meeting to order. We dispense with the roll call. Quorum is duly noted. Media was notified that was present today. First item on our agenda is a report from the Board Financial Consultant.
Thank you, Mr. Chair. Good morning, everyone. Merry Christmas, Happy Holidays. We have the November report in front of you today, and we have some good numbers to go over, and then we'll discuss the game plan between now and the few trading days we have left in the year. If you open your report for November 30th, 2012, you'll see the total account value before accrued income was $41,714,898. If you were to liquidate the securities at that time, you would generate an additional $8,234 accrued income, giving you $41,723,133. Drop balance as of November 30th was $20,317,332. Going into the month performance, you see November was a positive month for the plan, up 39 basis points. We were pleased with that number because the beginning of November didn't really start off on such a positive note. Immediately following the elections, presidential elections, the market took not quite a nosedive, but certainly a downward trajectory. Then was able to kind of recapture some of that towards the close of the month, and has recaptured that so far in December. So it's been a pretty good November and December. Based on how we started the month, we certainly thought or anticipated giving some of the market discontent with some of the electoral results, and again the fiscal cliff situation, which we'll talk about in a moment. If you're kind of looking inside your numbers there, you see the Dow Jones was the only negative indice on the month, down about 0.5%, 54 basis points to be exact, over the Wilshire 5000, which was up a little over 0.5% of 1%. So you're seeing some of those blue chip solid companies were lagging the market, where some of the other mid caps and small caps were adding value to the portfolio. Year to date, as of November 30th, 2012, plan was up 9.93% versus a blended index return of 782. Inside the numbers, everything performing well. You can see the Wilshire and the S&P performing much better than the Dow Jones. Internationals had a nice comeback in the last couple of months, finishing up at 884. Then you see the NASDAQ and then the Barclays 1 and 3 year credit at 3.5%. Fixed income, speaking of credit, has obviously had a really good year, primarily due to continuation of inflows into bond funds and the government in its treasury program, purchasing program. You've also seen credit continue to tighten, which has been good for credit spreads tighten, which has been good for the credit markets. If you're a fixed income investor in that space. Since inception, returns 660 versus a bogey return of 5%. I'll go ahead and give you kind of where we are up to date. As of last night's close, we had a negative day yesterday. The plant is up 10.56% as of December 19th. 10.56 as of December 19th. So obviously, with a few trading days left in the year, Alex, Larry, and I have been kind of discussing where our parameters may be. You certainly didn't think that December would be going in the area that it's going, or at least the upward movement. That's why you do stay invested. Excuse me, it's 10.65. I transposed the number, 10.65, so I'll give you a few more basis points.
Get every basis point.
Absolutely, we'll take it, right? The fiscal cliff situation, I think it's gotten to a point where, and that's the biggest headwind to the markets right now, but it's gotten to a point where it's good news, negative news, good news, negative news, that the market's really not being affected right now, so to speak, in any certain manner. If there was a large event where it looks like something's going to come into the House or Senate, maybe you have some more directional flow. But right now, it's just kind of a stalemate. People don't anticipate anything to be resolved really quickly, and you're not seeing anyone take a trade one way or the other. I spoke to a hedge fund manager 2 days ago, and we had this similar conversation where no one wants to be wrong because they took the wrong side of a bet as the fiscal cliff or what's going to happen, because there are so many moving parts to the fiscal cliff and so many issues that have to be resolved. By making a market-based bet or hedge, is a little more risky proposition. So people are kind of sitting in current allocations and letting things play out. Once you get some directions, once you know what the parameters are, once you know what the rules are going to be, then you're going to allocate appropriately. But making a move as a preemptive strike when no one, and when I say no one, no one knows what's going to happen, it is difficult. And you're not seeing hedge fund managers, money managers in a large part take a bet on one side or the other. Things that we have seen, although the Treasury market or the FOMC is continuing to purchase large amounts, between $40 and $60 billion a month on mortgage-backed securities and treasuries, you've seen rates tick back up. And we said before that at some point in time deficits do matter. You feel like that's some of the momentum there that say, okay, with this fiscal cliff, they're probably going to raise the debt ceiling. Let's go ahead and sell out some treasuries. Some of that can be traders who are moving market booking gains into the year. They want to finish with a good year. It's been a great year to be a long treasury player. So they'll book those gains in, they'll sell off their positions, yields will go up, and guess what? They get to go in and buy at a higher price and ride them back down again. So that's how they make money. They don't make money if it's a very narrow trading range, and we've had a very narrow trading range in the last quarter for treasury. So we're up to 182 in the 10-year. We've obviously been much higher than that in a very steady two-handle earlier in the year and last year. So still just going to have some of that push back and forth. Front end of the curve, not seeing much move, but in the back end of the 30 years plus, you're still kind of seeing that 3% number kind of be about the trading range. We were down to 280. I had to see what we were this morning when I got the 10-year number, but certainly in that area as well. Economic-wise, we've seen some good earnings. We've seen some poor earnings. We've seen some good indicators with the housing market, and then we've seen in other areas of the country some bad ones. So housing starts continue to be slow, but you are seeing some applications out there into the market. So those are good fundamentals. European situation, that just continues to be the story we've talked about for over 3 years now. And so there hasn't been any major developments in the last couple of weeks probably in that area. There has been some attention on Italy and France, what they're doing, and you're seeing now in France that they're having some of their citizens move to Luxembourg because the tax rates are going up beyond 70%. So it'll be interesting to see how that may affect some of their, from the tax revenue perspective. Any questions with the front page?
On the real estate, has it came in yet on our figures?
No.
It comes in at the end of the
Yeah,
quarter.
it'll come in. Lee, we don't have Goldman through November yet on the commodities fund. And we won't have Prudential until sometime mid-January for the last quarter. It is in for the third quarter, but we don't have, obviously, the full quarter ended yet this year. So we'll do our best to try to get that plugged in when we get the number in mid-January, but it's going to be close. It takes them a little bit longer. The Commodities Opportunity Fund will probably be difficult to plug in for December month. We'll have it in November month, but we won't have December month.
But you won't have it in time for this report?
For the end of the year?
Right.
It'll be
November
tough.
number will be not December.
Yeah.
The November number will be? And it's not included in it?
No, on the Commodities Fund.
On commodities?
We only get the real estate every quarter.
Right.
On the Commodities Fund, we get it every month. But it usually trails about 60 days, or 30 days after the month, excuse me. I'll get it right in a minute.
Okay.
On the Prudential, based on my last discussion with Kevin, I wouldn't anticipate a big upside on that for the quarter, maybe 1.5–2% at max for Prudential. So we'll just wait and see. They may close a deal, or they may have something that comes forth that surprises them in this last quarter, but I haven't heard any new news on that front.
If you go ahead and flip to your pie chart, take a look at the positions in a color photograph. You can see cash at 3.47%. We did take a strategy off the table. It was just a small position, not much money, $375,000 in the month of November, which was the NFJ dividend yield. It's a buy-right strategy. It's done well on a return basis. It hadn't been sold off lately, primarily because it's tied to a lot of the Dow stocks, and the Dow just hadn't performed well. So we went ahead and circled out of that. Growth is at 14.56%, value 8.73. Still continuing to see that trend. Again, at some point in time, that will shift, and when it does, will balance out the account appropriately. Oil and gas REITs, 2.21% on your sector play down at 6 o'clock on the pie chart. Then your other category, which Lee just mentioned, that's going to be your commodity, your mezzanine, and your real estate fund, making up 20.25%. Overall, your total equity exposure, given all that information, is at 42.02% as of November 30th, 2012. I think for the end of the year, we just want to continue kind of trekking along of what we're doing. As I mentioned, keeping kind of allocations of where they are is important when we really don't know what can occur out of DC between now and the end of the year. If in the event something really negative happened where the market looked like it was going to have a major sell-off similar to what it had last August, we're certainly liquid enough to be able to do that.
Quick snapshot on the managers, and of course we'll have this, well, it'll be maybe in January, but probably February. Our managerial review, I did a little work this morning early, and all of our managers have done extremely well, with the exception of maybe one, and I'm being pretty hard on Columbia's small cap growth, but it's trailing the index a little bit, and the peer group analysis I won't have until the end of the year. But manager-wise, we've been fortunate. So it's been a good year. Actually, large cap values had a pretty good last 30 days, which it's been a while since that's happened. So we'll probably look at a reallocation. The other work that'll be done will be on fixed income at the first year. Depending how this all sorts out over the next 30, 45, 60 days. With the cliff issue and other areas of concern, we're going to have to do some work on the fixed income side. Right now, I think we're in a pretty good spot, but that can change dramatically. We've seen a little movement here on the 10-year. I don't think it's going to get away from us, but if it does, we'll probably move pretty quick on that and try to protect our fixed income side a little bit.
Any questions? Any crystal ball predictions from Center Street on what's going to happen?
You know, I think there's a lot of mixed opinions over at our place. We've seen so many options thrown forth. I think if you started out probably Thanksgiving, most people thought that we'd have some kind of clarification, at least a direction. It wouldn't be an overall solution, obviously, but I think most people are a little dismayed at this point that we're still quite a ways from any agreement on that front. I still think something's going to come forward in the next couple of weeks, a mild solution, but the market overall has handled this extremely well. The equity market's kind of been mind-boggling. It's almost like just look the other way. Yesterday was the first day, what, Bo, in 2-3 weeks that we've had. Yeah. You know, we had a 100-point slide yesterday, or 98. I think, though, as we close in toward the end of the year, if we don't have a solution, you're probably going to see more days like that. But the real solution probably is not going to come forth for some time. They're going to try to edge by and, as we always say, kick the can down the road a little bit. Equities, though, going into 2013, we still feel pretty good, especially in the second half. Fixed income is going to become more of a challenge, probably. The Fed can only do so much. I mean, if QE3, QE4, I mean, you lose the ability to really control things after a while. So I think fixed income is going to be the real challenge. But dismay, I guess, is the best word I can use at what's going on currently. And hopefully we'll get a surprise here.
Any other questions? Next item is approval of October, November meeting minutes. It's been moved and probably second. Any further discussion? All those in favor signify by aye. Aye. Opposed? Motion carries. Report from the city attorney.
Any ground issues?
I just had to pull it up.
That email I sent you.
On Miss Garrett's case, Mr. Did you find out anything about her assets?
Yeah, I got the file emailed to me, I think on Tuesday, and I did the online assessment. Everything was available online. Found no additional assets other than what was already in the investigative report. I have not had time to go to Saline County, the assessor's office there, or to the state revenue office. I should have a report on that by the next meeting.
And you just got it this Tuesday?
Yes.
She made her payment this month? She's been making her payments, and I guess when we find out more about the assets, you want to give me instructions on what you want me to do with that civil judgment. Okay, on the model quadros, I don't know how much information you guys want on that. I did go through and compare the lot fee quadro compared to the quadro that was approved by, I think it was Dover and Dixon for this pension plan. There are pros and cons in both of them. I can't say that there would be things, that there's anything in the lot fee quadros that we haven't covered in ours, or that we would need to. There are some things that you might want to consider if you wanted to approve ours, or if you still want to look at adopting the lot fee one. I can go over. There are some things that they have left out of theirs quadro that I think that this board would want to include if you wanted to look at adopting that. So do y'all want to go through the details of it?
Let me, just from you think that it's something you can hit the highlights of and then allow each of the members to take the information over the next few weeks and then
Sure.
come back with a more detailed discussion?
Right.
Is that a fair way of approaching it?
Basically, and I talked to Crystal at the lot fee who reviews their quadros, and she basically says they require, an exact adoption of their form, and they don't allow any deviation from it. And by doing that, I think their quadro is very limiting in some of the options that would be available to members when they're negotiating there. This is going to be the result of a negotiation and a divorce settlement, so, we have more options in ours. For instance, our quadro allows for the determination of who will benefit from benefit increases in the future, and the lot fee quadro doesn't allow that at all. There's no distribution of benefit increases. Let's see, lot fee only allows distribution of a percentage of the benefits, and that can only be done for the period of time that they were actually married. Where we allow, you can either specify a specific sum, or you can specify a percentage, or you can specify, that there's no distribution of those benefits at all. And you'd only use that option if you have some drop language. You might distribute the drop, but not your pension benefits. There's nothing in there, in the lot fee language that addresses distribution of drop benefits. We would need that in ours if it was adopted. The differences on the issue that really got all this started was the reversion of benefits for an alternate payee if alternate payee predeceases a member. And the lot fee quadro, their language I think is a little more clear, and it just says that upon the alternate payee's death, the monthly payment previously assigned to the alternate payee shall revert to the participant. So I think it is more clear, and maybe if we had that language that's talking about monthly payment, as opposed to receipt of benefits under the order, that we may have not had the confusion about, what part of the benefits we were discussing. But the model that we have adopted for the city allows for, a participant member, let's see, hold on. It allows, our order allows for the money, if the alternate payee, predeceases the member, then, that alternate payee can continue receiving benefits if there is a surviving spouse. So, if the member has got a divorce and his ex-wife is receiving benefits under the Quadro, and he remarries, and his wife becomes his qualified surviving spouse, if the member passes away, then both the new wife and the ex-wife could continue receiving benefits under the plan. So,
Talking about Lofty?
no, this is under ours, not under Lofty. Lofty doesn't allow that.
As long as they're married for 5 years.
Right, yeah, as long as they're a qualifying spouse. So, both spouses would continue to benefit. And then, and those benefits would continue until the new spouse, the surviving spouse, passes away or remarries. So none of that is allowed under the lot fee.
What if the first spouse passed away?
Well, that's the question,
Or
that was what our orders, what our, language now says, that, when she passes, the first spouse passes away, our language in our quadro says that her benefits then would revert to the surviving spouse.
Or the surviving member?
Right,
Either one.
Right, either one.
right, either one. Well, we give it to the surviving member under our language that we adopted. And now we are, the language allows it to go, the language that should be in there says it should go to the surviving spouse. But most of the orders don't contain that language.
Let me ask you this. Under our existing qualified installation orders, let's, what does it say in regard to if the member has no current spouse, he has an alternate payee that is in a portion, and what if the member dies?
The payment stop.
Are you aware that we have quadros that say contrary to that? Is that
I
true?
did not find one. We
do.
have one, some that,
We have more than that, I believe.
well, I know the one that's proposed, when we get to it does say language that she would become a surviving spouse.
Well, my
But I
question,
didn't see, I'll have to look again, I didn't see that.
my question is, and this, was discussed in the last one, I believe, was that whatever the quadro that is approved by the board, by this board, we have to do what is in it, okay? Well, what do we do in that situation? Because that is contrary to state law.
I didn't, I reviewed them, and I reviewed them specifically looking at the reversion issue if the alternate payee passes away before the member. And I didn't see any language that, that was contrary to that. All of them that I reviewed, with exception of 3, said that the payments cease upon the member's death.
But
Of the ones that I had provided, I think there were 16 or so that I reviewed.
well, yes, ma'am, you need to review some more, because they're there. Okay. And I still need a copy of Mr. Chris', it's not in the packet.
Okay,
I
I
don't
have
believe,
that.
and I would like to see that if we're going to be discussing it.
I have my copy, but I didn't bring extra copies of that.
I'll make copies of you.
Thank you. It's just a concern,
Yeah, mhm.
Ms. Shades, it's just a
Yeah.
concern that is eventually going to surface.
Right. I'll be glad to go back and look again, but, all of them, except for three, said that the, it benefits, ended with the participant's death. Two allowed it to continue if there's a surviving spouse, and then one is not even a quadro, so,
What would be an alternate payee?
The former spouse
the former spouse.
drawing a portion of the member's pension.
She continues to get that if he doesn't, right?
No,
If the member passes away.
not unless he has a surviving spouse, a qualifying
The-
spouse.
Okay, I see.
The entire pension is predicated upon the member.
Yep.
Right.
Well, yes, except state law does allow, if there's a surviving spouse, then the, former spouse, the alternate payee and the surviving spouse can both continue to receive benefits. And, there was an opinion that was given to this board way back discussing that, and the opinion, was, I believe it was John Peace. His opinion was that, in those cases where that language is not in the quadros, that state law would control, and even though it doesn't allow for the benefits to continue under the quadro, we would continue paying those benefits under state law. Okay, let's see, go back to issues, which, on this issue, it does bring us almost full circle back around to we haven't, I guess, resolved the issue, when the order remains silent on it, whether the payments to the alternate payee would revert to the surviving spouse. We resolved whether it would revert to the member, and if the member if the alternate payee predeceases the member, we've resolved that issue. Now that's the next question that probably will come before the court is, when the alternate payee predeceases the surviving spouse, would those benefits then revert to the surviving spouse?
Sure, sure, state law says it.
State law doesn't address that point of it.
It says.
And two of our quadros says, and our model language says that it does, but that language is not included in most of the quadros we have on file.
If I pass away, then my full pension goes to my spouse.
Well, yeah, that one.
What would be the difference in surviving, first wife passes away, goes to the surviving member, he passes away, it goes to surviving spouse?
Well, because the surviving spouse is not the surviving spouse of the alternate payee, that's a benefit that was created. I'm just saying for the same reason that the issue came up for the board, whether if the alternate payee predeceases the member, and you guys adopted a resolution adopting how this board was going to handle that in the future, because we received an opinion from Kupak Rock, et cetera, and that's what we got here. That opinion and the resolution that this board adopted did not address the situation of an alternate payee and a surviving spouse.
Let me ask you this, how does the fire department handle theirs? You represent them, don't you? Has this ever came up to them?
The fire department, does not require quadros.
Do not require fire?
I thought that was required by federal law.
Not by federal law, it is required by state law, and I can't really, tell you how we got to the point that they don't require quadros, but isn't that correct, Kathy?
Mm-hmm.
You'll make distributions to, spouses, or former spouses under the fire pension without a quadro, won't you? You'll do it just based on the divorce decree?
Yes. Yes.
But state law doesn't require a qualified domestic relation order separate.
State law it doesn't require it to do that. State law requires us to recognize a quadro if we receive one. But it doesn't require us to have that before we make the distribution, if the board chooses to not do that.
Back to the question that Lee asked. Let me give you just a little bit of history on that. It was this board that lobbied to have the law change that you mentioned. Because before, you had a member, you had an alternate payee, the member remarries, you have a qualified current spouse. The alternate payee was receiving, say, 50%. The current wife, upon the death of the member, was receiving 50%. And what used to occur is, upon the member's death immediately, the alternate payee lost all benefits, and it all reverted to the current spouse. So this board elected to lobby to get that changed, simply where the alternate payee would continue to receive her portion, and the current wife would continue to receive her portion. But upon the death of the current wife, everything terminates, right? So Lee's situation,
Even with the alternate payee?
even with the alternate pay, because it's predicated on the state law that it is the member, all predicated on the life of the member. And if the member passes away, then it reverts to the current qualifying spouse. But the logic here is that if then the current spouse passes away, see, it didn't cost, what the point I'm making, it didn't cost the fund any money, okay, because what used to occur was the alternate payee, all the money would have gone to the current spouse, which is exactly what happens. But, you know, the question of, you know, what happens if the current wife passes away, it terminates, right?
If the current wife passes away, yes.
And if the alternate payee passes away, the way it used to be, the current wife would already have had that, wouldn't she?
That's what it used to be.
Okay, so now we're saying that it's not predicated upon the wife of the current qualifying spouse. If it doesn't revert to her as the qualifying foundation basis for it.
All I'm saying is, comparing these two quadros, LOGFI does not address that issue and does not allow that reversion at all, and does not even allow or recognize the continued benefits to the alternate payee and the surviving spouse under state law. They just say, alternate, upon the member's death, all payments cease. That's all their quadro. Our quadro, the form that was adopted by this board, is much better for the needs of this board, because it covers that state law that allows for the alternate payee to continue receiving those benefits, and it also covers, if the language is put in there properly as under the form, it would cover any issue about reversion.
But Ms. Chavis, you know why it is silent on that, and that it doesn't revert to the spouse, don't you? With law, is because that's not
Right, it's not
that's
there.
not state law.
It's not for LOGFI.
No, I know.
Right. So all I'm not addressing the policy. I mean,
But it
that's
is state
what
law for us.
It's state law for us. So I'm just explaining that if you just blatantly said we want to use LOGFI's form, not the form we already have, then you're gonna have a problem, because their law is different than our law. Our current form covers that, covers the contingencies of reversions in the future, and if used properly by attorneys, this issue will be covered and it won't be an issue for the board, okay? But I don't want anyone to mislead you that all this language that we have suggested under this form was actually used under the quadros that we have adopted so far. But I'm not really, I'm just trying to compare these two quadros. So LOGFI would not address that for us appropriately, but our current form does. Okay. The The other big issue, that, Lofty Quadro, if you adopted it as it currently exists, does not address the, division of benefit increases. And our form does allow that to be addressed, either by stating how benefit increases will be divided in the future, or, stating that there is no, the member retains all benefit increases, et cetera. So on that issue, which I think is probably not relevant to Lofty, but again, that's an issue that this board, we have different rules, so our form covers that. And, and the other, and those are the main issues, cause what I think probably is gonna really be a concern to your members, are what's gonna affect the bottom line of benefits that their spouses may receive in the future, or what options that they have to accept or include in the quadro, when they're negotiating. The other are kinda, there's language that, administratively would probably be helpful. For instance, lot fee does not allow any payments of less than $100, where ours is no payment less than 20, and things like that. But, I think the, payments to the, surviving, spouse, and the alternate payee is key for this board, and the division of pension benefits. Benefit increases would be key, and those are addressed more appropriately for our board under our rules. Okay, but I do have a summary here of the differences that I noted in the two plans, and a copy of each plan. If you guys wanna take that and you can look at it, and if you have any questions next time. Let me see here, I have some highlights. And I can give you that at the end if you want me to.
I'm sorry?
I'll give you guys copies of that at the end
Okay.
if you want me to.
Yes.
Okay.
I'll have those copies.
Okay. Now. And you'll have to help me with this name, how he says Zakowski? Zakowski. Quadro, I have that, I've reviewed it, and it does not conform to the, model plan the model, form that we have out there. But I did wait before I guess rejected it or sent it back to their attorney, because the other plans we have in place don't conform either. I mean, none of them say exactly what our form suggests it would say. And before I treated this one any differently, I wanted the board's guidance, to tell me how you want these orders to be reviewed, and how strictly you want them to conform to the form that's been adopted by this board. Because, there are even some, I think, issues probably in the quadro form that we have now, that, for instance, our form states that, these benefits will start on a specified date. Well, that works if the member's already retired, and that's a good way to handle it. But if the member hasn't retired, then you're not gonna know what that specific date is in the future. So you actually need some alternative language that someone could use that addresses that, and basically you'll say that these payments would commence upon the retirement, or when they cease employment, or something like that. So I can't say that you can, I really don't know how the lot fee addresses it, according to Crystal, if it's not exactly in conformance with their form, it gets sent back, and she doesn't even forward it to the attorney for review. And until there are no differences other than name and amounts and such. So, you know, you guys can give me your directions on that.
Did you say, now are we talking about the quadro that we have before the board in Suburban?
Right,
Did you say it doesn't conform?
it does not conform.
What part of it?
Have
Just
copies
do
of
we
this
have the
part?
Jennifer
Does it-
form, our current
Yes,
form
uh-huh.
we're using?
Here's our current form.
Not in the packet, though.
Here it is.
Not in this.
And sorry, I've noticed this copy has some of my notes on it when I was reviewing it. But,
Sure, can we get, when we've got these issues before the board, can we have copies of supporting documents in our monthly packet?
Anybody else?
These are just come from the attorney's office. Usually if we get them in time, we try to do that.
Well, the reason I asked that service, I mean, it's on the agenda to discuss model quadro, but we don't have a copy of model quadro in the packet. Of course, we didn't get the packet till today, but we still don't even have it.
Don't you have that as a handout? Yeah. I think she was gonna wait till after the discussion, but go ahead and pass out what you have.
Okay, there's the model.
The model is what we've adopted, right?
Right, this is Lockheed's model. Since we have a member absent, let's make sure that Ken has all the things.
I'd just like to see our model. That's the one I need. That would actually one of
Is
those.
this our model here?
Sure.
So the one, I guess, while we're looking at this, the one issue we've got to decide is, or let me understand, we have not acted on this one that we received. It seems like it came over in June, maybe, or did we just get it?
I think last month, it was here last month.
It was dated July of 2012.
It
Wa-
came in
wasn't brought
July.
before the board until last month, was it?
Excuse me?
It wasn't brought before the board until last month, I think. We paid-
Well, it came over in July, it was presented then, but then Kim went on maternity leave, and the next attorney, the fill-in, asked that it be tabled until Kim's return.
So so there's been no action on this.
Correct.
And I'll point out on the cover letter, on the model that you've been given, you know, nothing in this says that, that it has to strictly conform to these rules, and that this is the only form that we adopted. And specifically, he says that it's a sample form to be followed. There's options that you can select as you go through and, as you're completing this quadro. So, I'm not saying that this wouldn't work. I mean, it would be effective. We could identify how much, money should be distributed to his former spouse under this. But it does have some problematic language. Probably the most problematic language is that, language that designates his former spouse would be his surviving spouse if he's deceased. And I think probably that would be not, in compliance with what, this board has adopted in the future. And again, it contains a lot of language referring to the Internal Revenue Code that we don't have in our form. If you want me to go through it specifically, I can. If you want to go over. If you want to just direct me to go back and work with their attorney to get this as closely conformed as we can, because they're already divorced, so really their negotiations are kind of done. if you want me to try to go back and just work with their attorneys and try to get this conformed as closely as I can to our model, and then bring it back, I can.
To me, and this is the approach that we took from the beginning, is, and I hear you loud and clear on the Lofty Quadro, because it is very rigid, very specific. It allows no room for the couple to determine who gets how much of what, okay? For example, the Lofty Quadro says that if there's 20 years service and they were married 20 years, it will be split 50-50, period. And you can't deviate from that. Well, there may be a house involved, and one may want to give the one a house, and they might want to get 20%. We've always allowed that because that doesn't conflict with state law, okay? But what we've got to be rigid on is any potential conflict with state law. And for example, now, just looking over this right now, look at section 8 and 9. And you brought out section 9, I think, which is in direct conflict with state law. If the member passes away, she is not a current spouse. It terminates. And when we allow things to get into Quadro that is in conflict with state law, it creates all kinds of problems. I mean, do you agree with that?
It does.
And I think that was to Kim's point about having these things on file that, you know, or that when there's a conflict, and, you know, that was, we're not going to go back and forth in that discussion. But I would suggest that we direct the attorney to get with Mr. McCoy and get this in a form that's acceptable to the board and bring it back.
Well, let me ask you one thing. That, to me, that sounds very, the last sentence of paragraph 8, on the payee shall then be entitled to receive a post-retirement surviving spouse annuity in accordance with section 9. Is that what you were speaking in regard of, as well as section 9?
Yeah, those go together, but that wouldn't, you know, that's not something that's allowed under state law or that's part of law.
Because right now, she's not getting anything, is that?
Correct.
Yeah, so we need to try to get this verified.
Because this Mr. McCoy did call this past week asking where we stood on it, and I told him that we were meeting today and that we'd get together after that.
Because we'll have to make it retroactive, I assume.
More than likely, yes.
So is there a motion, or do we need to just, can we just direct Kim? Is it on our agenda? It's not on our agenda to add.
I think it's, yeah, E, 5E.
Yeah.
Review.
I think for the record, we ought to have a motion just so we can set a standard going forward.
Okay, so to direct legal counsel to contact their legal counsel and
Okay.
it's
Yes, sir.
acceptable.
That's it.
Okay, moving properly, second, any further discussion? All those in favor signify by aye.
Aye.
Opposed, motion carries. Anything else, Kim?
That's all. Oh, well, it's not on the agenda, but Kathy reminded me yesterday that we still have, I guess, the issue pending regarding allowing the continuation of survivor benefit for a spouse who remarries after they begin receiving those benefits. And if you want to address that at this meeting.
What is that?
There was a motion, and I believe this was, when Tom was, representing the board, it was long before my time. But, this board passed a motion, adopted a resolution to allow survivor benefits to spouses who remarry after they begin receiving these the spouse or surviving spouse benefits, to continue receiving the benefits. Right now, if a surviving spouse is married, her benefits cease.
They passed their PRB meeting last time, I believe, and it was adopted by them. We passed a resolution and voted on the
Right,
resolution.
pass the vote.
We sent it to the PRB and the actuaries, and the actuary determined we could have that benefit, and it was passed at the last PRB meeting, to my understanding.
That's the
Is this
last 3 pages in your packets.
3 pages?
It's
Oh.
the last
Oh,
3
I'm jumping
pages.
ahead, I'm sorry. Okay,
No, that's
okay.
okay, I just didn't know where to fit it in, so I put it under other business, but,
I think the issue that came to me, was brought to my attention was that, some of you had thought that we had already passed this in the past, we had already adopted this resolution in the past. And so we went back to try to find that resolution, and we couldn't. The only thing I could find was about extending, surviving, spouse benefits to marry if the member marries after they're retired. But this is a different issue. And, but this does require that this goes to the city board of directors, and for, approval of this one. This can't be approved just by this board.
The statute does.
So would you just draft up a, resolution that we can add to the agenda in January? This is something we actually acted on in 2005.
No. This 2005 is the resolution that I think a few members were recalling that, and they thought that this
Oh, I see,
already
yeah.
covered the issue. But it's a little bit different, and it's a different code section. That's just included because I was trying to refresh the memory of what we had approved in 2005. This issue is a little bit different.
Right, this board has to act on
Right.
this.
Mr. Chairman, how about 5D?
Okay, revision of rules, policies, and procedure manuals.
Yeah, I think so. This was tabled from the last meeting. It's regarding the resolution that we passed month before last, of getting language in our qualified domestic relation order section of our policies and procedures, clearly stipulating that in all situations, if the alternate paid precedes member of death, it reverts to the member. So we do have that resolution, as you know, but I would think it needs to be, since it is a policy of practice now, it needs to be.
And do we, what type of, I mean, so we passed the resolution, and you're just saying it needs to be included in the procedure manual?
Yeah, I don't think it necessarily has to be the entire resolution by any means, but I do believe at that one point that, again, that if the alternate pay precedes member of death, it will in all cases revert to the member, which is what the resolution basically is.
The resolution is last month's.
Where is that at? Ms.
It's in
Patton?
last month's packet.
Ah,
So what is our, what are our rules for updating the manual? Is there a,
This is the manual right here that we have in our office, so I guess if y'all want us to add that to the manual, we'll add it to the manual.
I think that was in the motion that I made concerning the passing of the resolution to include in the policy. I think that was in the motion that passed, but if it's not, I would make a motion to include it in there. So, I mean, resolutions during the course of time can sometimes be forgotten about, so on and so forth. And that this would just firm it up where when I'm gone, all of us, it'll be.
well, I've been scanning them, I mean, of course, and we have them out there for all of us to see, but, so you're wanting copies put in this manual of resolutions, is that what I'm understanding?
No, just that particular, the
That
language
one.
regarding, what happens if the alternate payee, and I would just put the language in there, maybe Kim can look at it and say per resolution and so adopted on this date. I think that's all we need.
We can get that done.
Okay.
And then maybe just have a draft of the language that we've added at our next meeting, okay? All right. Roger? Yeah, or anything else for Kim? Roger?
Did you all have anything else? Thank you, Mr. Chairman. A couple of things to report to you from the PRB and LOTFE board meetings. There was a request made by the city of Benton for their consolidated plan to allow them to adopt or to go to a 25-year amortization period as opposed to 15. David Clark had queried the actuaries. As to the effect of that, and the actuaries basically indicated it obviously would increase the long-term cost, but it was not something that would be problematic short-term. So, I spoke basically in favor of the board taking a position to allow it. They ultimately did, and the benefit of that for this system is that when the time comes that you consider consolidating your plan, you should be able to have a choice of amortization periods, 15 being the standard that's out there, but you could go as long as 25. Particularly in a system as large as this, with as many members that are going to be around for a long, long period of time and payouts being made for years and years, 25 is not unreasonable. The effect is that it will reduce the actual annual outlay or payment to merge your plan, because what you're going to be adopting if you ever do this is to pay off your unfunded liability, whatever it is. And 25 years, it's like, I guess the way I would compare it to something that you all might understand is it's like the difference between a 15-year mortgage and a 25-year mortgage. A 15-year mortgage is going to have a higher payment. A 25-year mortgage is going to have a lower payment. You'll simply pay more if you pay over 25 years, but the payment's more affordable. So this would give your plan a good option when and if the day comes that you get serious about considering consolidation. This is a tool that just simply is something you can choose to look at as to whether it makes the payment more affordable for the city. So it should be a little bit, it should be of some help in terms of getting your cost down, reducing your cost to amortize.
Is there an interest rate?
Yes, sir.
that we get to pay?
Yeah, basically you're paying interest as you go. I mean, there's,
What is that, basically?
I don't think it's, I can't tell you, you'd have to ask David. Mr.
Is it a
Howard,
set
talk to
interest
that.
rate at the time you do the amortization, does it change?
No, it doesn't change, as far as an interest rate. But again, that's something you need to ask David, not me. And I think when you get serious about looking at consolidation, you're gonna have all those numbers before you, and you'll be able to measure, which is your best approach. This just gives you one more way of looking at it that would ultimately reduce the city's cost per year annually.
Now,
Just means you gotta pay it longer.
This was requested by the city of Benton,
Yes,
and they were willing to extend it out 25 years to make their payments lower.
it helped them in their current budget year,
Budget
give
year.
them a much smaller payment than they were looking at, so it made it easier for them. They were more than willing to pay it for a number of years more, in this case 10 years more. They just were looking for a lower payment. So that's what it accomplished for them.
Would it be very high interest rate?
No.
Do you know, Roger, or have any idea of using a 25 versus a 15, if it will have a substantial impact in terms of lowering the annual payment or not?
I think the answer to that would be yes. I think what you want to do is you want to ask for a specific number. You want to ask that be estimated by probably Jody, or David can get that accomplished via Jody. So you know what you're looking at. I mean, that's the only way to really answer that question. I believe it'll be substantially lower than this. But you need to ask, and so you've got that information before you. One thing, when you do consolidate a plan, whatever your debt is at that time, basically is kind of frozen in time. And therefore, it's a way to reduce, in some ways, your long-term cost as well.
When you say frozen in time,
Whatever you owe on the day you consolidate,
say
whatever
that
your
we
unfunded
consolidate, we
liability
owe X amount of dollars, that's frozen in time.
basically.
Let's say we wait 3 or 4 years later, it goes up, doesn't it?
Could. I mean, it depends on a lot of variables, how many members are in the plan, how, what the ages are, what the life expectancies are, how many of them have quadros.
What's the quadro say?
You get the point. I mean, the number's gonna vary, but generally, the earlier you look at consolidating, the lesser your cost.
But our actual unfunded liability, it keeps rising every year.
It does. You keep adding members that, become a liability. They're young, and live a long time.
Marry younger
Okay.
wives, that would affect it.
That could affect it, yeah.
You can have everybody keep it yourself.
I can't do what?
You can't
So
do
y'all
it.
need to put the word out
Too
there,
bad.
don't marry young
I won't
wives.
marry.
That won't work.
Well, you stay single.
I would.
Let me cover a couple of other things here that I think legislatively should be of interest to you. Resolution 26 that we've discussed in this board, in terms of the municipal league taking a position with that resolution, there are some parts of that the PRB board was comfortable with and that the Lotby board was comfortable with, but those were primarily the sections of that resolution that encourage cities to have a millage. If they don't currently have a millage, it's dedicated to pay down their old plan liabilities. And of course, they encourage people to support the constitutional amendment that failed, which would have allowed bonds to be used to finance old pension plan debt. But the other portions of that resolution, the PRB board took a position to oppose anything within that resolution that would have been damaging or detrimental to the lot fee plan. And there were suggestions in there of reducing benefits and reducing the funding for lot fee in essence. And by reducing that, it would kind of make lot fee eventually kind of look like the old PRB plans where they were underfunded. So they took a position, a strong position to oppose those parts of Resolution 26. There are a couple of other things that may or may not come about in terms of proposed legislation, but it's hard to say. But if they were to be put out there and proposed, they would be damaging to lot fee, damaging to the employer side, and ultimately damaging to the members. In particular, we have some cities that aren't really happy with Act 979. Smaller cities are seeing their contribution rate gradually rise at a rate of 1% per year. Another couple of years, everybody will be on an equal plane. Every single employer will have the same contribution rate for lot fee. That same funding formula determined to fund your benefits for the old plan at a specific percentage. I forget exactly, Lee, and you may be able to help me a little. Is it 70%? Seems like it's 60 or 70% of whatever the base benefit was, and then the balance the employer paid. So some cities like Russellville saw their funding diminish. In other words, they're not getting as much premium tax help as they did before, as much subsidy. So they didn't particularly like that. But the objective of 979 was to get everybody on a level plane, and we're getting there. So you have some cities that are objecting to losing some of that premium tax subsidy, other cities objecting to their costs going up. So there may be some effort to try to change that funding formula. That would be unfortunate because it would affect you. You, in essence, benefited from 979 in a fairly substantial way, which is very important. The situation that was totally unfair is now fair in every sense of the word. It's just nobody likes to pay more, and they're complaining. For the Municipal League, I suppose that's somewhat of a dilemma because they represent all these cities, not just a few. Particularly the larger cities are the ones that were being most unfairly impacted before. So I don't know what position they might take. But there may be some effort to change that funding formula. And if there is, then I think we'll have to take a strong position to try to hold the bar right where it is and try to retain 979. There are some other potential bills out there to allow cities to withdraw from lot fee. And the effect of that would be that you'd have pension members dropping out and funding would go away. Where would they go? Well, they are going to suggest they go over into APRS. The effect of that would ultimately raise the cost for all participating cities, and those that were allowed, if they were allowed to withdraw and move over to lot fee, their cost would go up. So bottom line, any type of legislation that might be suggested like that, it will have a negative effect on the employers and the members. But particularly the employer costs will rise. So whether somebody pushes that legislation or not, I can't tell you. I know at least one senator that has talked about it. And really it all stems from one town that has, they only participate in the police plan and they only have one police officer. They're not happy. And which is kind of silly. When you really look at the actual cost they incur, it's not very substantial at all. There's always a little misunderstanding in terms of the total employer contribution rate and then the net rate. That's where things get confusing. A lot of times the city doesn't understand that the net rate is after the premium tax subsidy, and it's substantially less than they think it is. And that's kind of the case in point here. But anyway, this particular legislative session will be one of probably being fairly defensive and trying to protect what we have now.
When do you predict it will start, the session?
The session starts January 14th.
January?
That's the official swearing in.
Okay.
And
Roger, on the regular supplement program, the $50 a month, I know you helped us get that passed in your legislature. We haven't had an increase in it since. It was designed for medical costs, expenses, medical costs and expenses and things that have risen tremendously. We talked about last month maybe getting some legislative draft just to try to increase the regular supplement somewhat. We got close 2 years ago, but we didn't get it through. Is there a possibility we might could run that again this session?
Lee, to answer that question very directly, that you can always run something.
Okay.
So, you know, no question you can put a piece of legislation out there. The question then does become, what are the odds of you being successful? And I would say right now that odds wouldn't be very good. Funding is still a critical issue for everybody. Therefore, everybody's trying to protect what they've already got for fear you're taking money away from some other source. And when we passed 979, one of the things that was, in order to get that passed, one of the things that was written into that bill was that the portion of the premium tax that the state police get was kind of frozen and locked in. They get theirs. We're going to start actually eating into that through 979 because there will be less money to distribute to them. So even though they may have a locked-in amount, there may not be enough to distribute to them because 979 is picking up more of this money to distribute to the old plans. So we can run the piece of legislation, whether there's money to pay for that or not would be questioned. And if there's no money to pay for it, then obviously you're not gonna get it done.
I mean, some type of cost, you know, what, $25, $35, whatever a month, to increase it somewhat.
We can certainly try if that's what you'd like to do.
This is up to the board, that's just, I was suggesting, I don't know, it's up to y'all.
Would there be any downside to running something, a minimal deal like that?
Are you talking about this being for just one plan
No.
or for all old plans?
All the plans.
The only downside is the pressure on available funds, that's it.
And I think you're also saying, without saying it, is, you know, when you go out there, you wanna have something has, like, for instance, on our legislation, when I presented, to the board, you know, I kind of put it in categories of, you know, here's things I think we can get done, here's things I would like to get done, here's things that I really wanna get done, but really have not a chance and get them done. And so, over the years, I probably have scaled back on going out there with things I just know aren't gonna get done, you know, so, and I don't know if that's part of what you're saying or not.
Well, you can always put together a piece of legislation, put it out there, and you can always ask. Right now, I can't tell you how much pressure there's actually going to be on what funds are available. And where you're gonna take that money, where it's going to come from, is out of the premium tax pool. That's the only place it can come from, as far as providing a benefit to the old plans.
And that would come out of the state police plan.
It would come out of the pool, Lee, and if we use up all the money that's in there and we take, we kinda have the first pass at it. So we could potentially be reducing the portion that the state police get. It depends on what the projection is of how many dollars of premium taxes are going to be. So if there wasn't enough money to go around, then obviously on the state side, they would be concerned we were eating into that. To address what the chairman is saying, that I can't tell you that it will succeed. I'm trying to tell you that the odds aren't very good. But I don't want to discourage you and say, no, you can't or you shouldn't put a piece of legislation out there. The only other downside is that if we're going to be in a position to be defensive and protect what we already have, it's a little hard to justify at the same time asking for more. Which is more important, protecting what we've got or getting more? Now, on the city side, their concerns are really about their unfunded liabilities. So if this in any way affected that and made it greater, there would be some pushback there too. But if what you would like me to do is get a piece of legislation drafted, we can look at it and see, and we can test the water a little as we go along. We don't necessarily have to push it forward, but at least we can get some more information.
I would like to see us do that, and test the water as we go along and see how it goes, because that will be the only piece of legislation that we'll be asking for.
If that's what you direct me to do, I shall do.
But that's up to the board, I mean, that's my feelings on it.
I mean, you can always give something up, but if you don't have it out there, and you know, we came pretty close. We got it out of committee.
Yes.
On the big increase. But, you know, we got, I guess, in and around in the Senate. Whatever. So, but a minimal increase, you don't ever know out there. And I think, well, it's not, I mean, it's easy to justify because there's been no increase in.
Well, let me ask you a question, and I'm not sure exactly how. You've got some plans. Some cities have a plan where members, retirees in the old plan are currently drawing 100% of their previous benefit, and in addition to that, other increases on top of that, some of them very substantial. So you want everyone, even those that, I mean, if you want to direct this at the plans that haven't had increases or aren't even close to 100%, you want to put a benchmark and say that it only applies to those that are below 100%, because you're certainly not at 100%.
Personally, I do not want to start eliminating certain funds in the state that's funds just like we are. You know, I don't know what 100% of salary and what they're drawing may not be, but 50% of salary, what I'm drawing, I might in effect be ended up drawing more than they are. So I mean, I just don't want to, I don't want to.
I understand, I just needed to ask. So I'll, if that's what you would like me to do, see if we can get something put together, I will do that.
Okay, anything else?
No, sir.
Roger. Item 7.
Planning committee,
Planning committee, we met shortly this morning, we're discussing this 15 and 25 year. I have some questions on that we're going to contact David and discuss with him before we present it to Mr. Moore.
I look forward to the discussion.
And you need to look forward to the presentation.
The presentation, I should have said, you're right. I gave Sarah off the rest of the year, so
That's a good thing.
we could table the financial report.
Do we have any membership changes? Where would that be in the packet?
There's not any membership changes.
Discussion of website, I think James is not here today, so
I may be wrong.
unless anybody
I
has
bet you're
another.
not.
I just,
Before y'all leave.
Yes, sir.
There
Well,
was
you can get
a
off.
question last month about our, what we gonna talk about is, what we're doing. Yeah, number 11. Could you stay just a second?
absolutely.
Because we're gonna get right to that.
Okay.
We've been obviously dealing with a lot at this point, so I don't have any answers on the health insurance piece, and I'm gonna try to either have Don or Jim come in January or February, okay? So I'll work on that for you, and then on item 11, this is our periodic 2-year review of our professional providers. I did sign this morning the extension with Roger for 2 years, so that's done. The question that has risen after our last process, RFQ process, and I don't know how long ago that was. Was it 3 years?
I was just asking, I don't remember.
Yeah, I think it was 2010, 2009, 2010,
The
2010.
2010.
Okay, so we're at the end of the, we don't have a contract. Do you all have a copy of the contract?
We have the original contract that was done in 2006, Bruce, and
that's what we have.
that's what they have.
So after our last round, we didn't enter into another contract.
I don't think we officially did a new contract. We did reduce our fee. Larry, do you remember what that was?
No, the account, just my recollection is that, there was not a new contract, Bruce. I think that we continued with our existing contract with an amended fee structure. And so we need to go back and figure out, she was asking me a minute ago, I think you asked for that before and we forgot it. We're gonna go back and look in our files and see if we can determine exactly when that was and see if we got anything, document the file when those changes were made and if there was any communication between the two of us.
Yeah, could we do that? Because normally I would have said we need to enter another contract, and so I'm not sure where the ball was dropped. But I do remember the amended fee schedule.
Right.
So we'll be able to go back and pinpoint that date and see if anything was contractually agreed upon between the two of us. But to our recollection, without looking in the files, we did not renew we did not have a new contract filed.
One of the things, if you all would pull the RFQ that we issued, many times we put in what the term would be, and so that might have a little help us there a little bit. Okay. Anything else on that item? All right, thank you all.
Thank you. Appreciate it.
Table 11, table.
I'll have the date that we changed the fee
We
schedule.
don't have any fun.
We don't have it, we'll make it up.
Comments.
Yeah, well,
But it's.
It's 13A, we really already talked about.
See you.
Y'all have a Merry Christmas.
Merry Christmas.
y'all have a good Christmas.
Too.
See y'all. Thanks for coming, man.
I know,
See y'all.
I'm just looking on there.
Yeah, we sort of covered, didn't we?
I think we did. I think.
They're gonna send that to the city board for approval.
Right, that's the one we gotta send. Cam's gonna work on her list. And then the GFOA post-retirement benefits.
That's something David Clark emailed over and just wanted passed out to all the members. It's in the packet right in front of the survivors, where we talked about the survivors' benefits at the end. It's right in front of that.
Where at now? Any
5
resolutions allowed?
pages from the back.
We can go back to tabs.
That was from just lack of time.
We understand.
5 pages back.
And while you're looking for that, Ferris, there is an invoice in there from Kotak. Did y'all discuss that while I stepped out?
Yeah, something.
You did.
How much is the total amount?
$1,700 for this one and $10.
I'm sorry? 7 what?
$1,710.
How much what?
1,000.
Okay, I got it. I thought she said 17,000, because I thought I'd seen 7.
1,700.
I'm sorry.
And what was last month's? Did you got-
3,000 and something.
I'm just trying to figure out the total bill on it.
5,000.
It's on the expense
It's,
sheet here. 3,712.05.
17 is about $5,400.
For what? For Kutak Rock to examine the Anderson Quadro.
$5,000 to look at Quadro,
No, 5,400.
There's 4 of them working on
to look at, oh, take 4 of them?
Who do you expect to open the envelope?
I could open it for that much.
Well, we're fortunate to have a city attorney.
it. Yes, it
Appreciate
is. Yes, it is.
And I would do 2 quadros this time.
So, do we need a motion to approve to pay the bill?
Oh, you gotta pay it, make a motion, you gotta pay it, even as high as it sounds to be.
I'll second this motion.
All in favor, signify by aye.
Russ?
Maybe some wise.
I think somehow we failed, maybe, I just noticed it.
All right, hold on.
Oh,
All in favor, signify by aye.
Aye.
Thank you. Motion passes. We failed what?
To have the, what am I trying to say, not review process, but whatever the city puts out, I'm drawing a blank. RFQ on the, attorney business.
Yeah, it wasn't on here, and I was looking back on what we said we wouldn't.
Yeah, the motion passed last meeting to begin the, RFQ process for legal counsel.
Yes.
Private legal counsel. Not sure how we left that.
I got one other thing before we quit.
You know that, Mr. Chairman, I have no idea.
last one, and we were gonna also find out if, they would agree to sort of a month-to-month type of deal, and I don't know, did Sarah talk to them, or?
I want to say that she did contact them, but I don't know that she's heard back.
Okay.
So we'll have to report back on that next meeting.
Okay. Kristen?
There was a cash flow study that's $2,100 that went to Jody Osborne Carrero and Associates, and that was the one that we read in the last meeting, right? We looked at the handout. Is it necessary to do another one involving the 25-year extension?
Yeah,
And kind of get another chart or an idea?
actually, I think in that bill, unless I'm mistaken, we had the, resolution. You had to do a study on the resolution to extend, benefits to, surviving spouses if they remarried.
Okay.
And by state law, that had to be a resolution of this board. And they have an established set fee, you know, PRB for doing those, but he kind of worked that in with this bill. So all of this bill is not necessarily for just work he done, but to answer your question directly, LOPI requires their, actuaries.
It's a different actuary.
A different actuary.
Yep. Answers my question. Thank you.
Okay, any other business to come? Okay.
Yes, sir. Earlier they indicated there wasn't a change in the pension roll, but in my packet here, I see there's a remove from the pension roll of Betty Waller. Is that overlooked, or we already?
There is a change. Could you tell me where that's at?
It's,
It's right before the GFOA.
I thought you said there was.
I misspoke. I thought Kathy had told me there wasn't, so I apologize for that.
Betty Waller? Betty Waller. Betty Waller.
Would there be Officer Anderson too that passed away? That was,
What's the question?
And Bob Anderson.
Bob Anderson.
That'll be in the next
It'll be
one.
next month. He was entitled to this much check, so I'm waiting on his wife's paperwork so we can do it all together.
Tim, do you wanna make a motion?
Sure, I'll make a motion to remove Betty Walworth from the pension roll.
I second.
It's been moved and probably second, any further discussion? All those in favor signify by aye.
Aye.
Opposed, motion carries.
May I make a motion to adjourn?
May.
Second.
All in favor signify by aye.
Ah.
Opposed. Merry Christmas.
Thank you.
Y'all adjourned.
9.